Namaste and welcome to part E of funds flow under Simple Solution series. This is illustration 15 from page 291 of study notes. This has got very effective adjustments that can help us solve similar problems with variations, and this involves preparation of three statements and also working note ledger accounts. Let us get into the initial review of the illustration. First column is 30th June 2015 and second column is current year 30th June 2016. Amount is in absolute rupees. Under working note, let us note a few points. They have given authorized share capital, which is not relevant for our workings. We should not get confused. We are interested in only paid up capital, not authorized capital. Number two, debentures. First year 4 lakhs, second year nil, means there is a redemption of debentures. Loan on mortgage, there is an amount of 560,000 raised during the year. It is a receipt. In case of depreciation, we understand that whatever appears under assets, they are all WDVs. Therefore, whenever they have said depreciation has to be a percentage on cost, we have to apply on costs separately furnished by the problem as such. Hence, we should be careful while calculating depreciation. The company has purchased shares in other entities as investments, and they have received dividends also. How do we account the dividends which have been routed through investment account? This is one issue to be seen. It is an income as well as a cash flow. And there is one transaction involves goodwill is written down. Similarly, general reserve also has come down and they have bypassed profit and loss account. It is a direct transaction. If it is matching perfectly, we can simply keep it outside our working things. It need not have to be routed through profit and loss account again. Goodwill has been written down against general reserve perfectly in order. It need not have to come into funds flow, or it need not have to come into profit and loss adjustment account at all. Then we have two concepts of annual dividend and interim dividend. You have to understand one thing very clearly here. Annual dividend has been paid towards the previous year and interim dividend is paid towards the current year. Both are independent and hence in aggregate they form the total outflow. Means annual dividend plus interim dividend is the total dividend. Let us get into adjustment. First, let's prepare land and freehold building, 9 lakhs and 9,76,000. Depreciation 2.5% on 10 lakhs, 25,000. And the land was sold for 2,50,000 and its cost was 1 lakh, means 1,50,000 was profit. As a result, accounts total is 12,51,000. Out of that, 9 lakh opening, 1,50,000 is profit on sale of land. Difference is addition to land, 2,01,000 to bank. It is an outflow which is missing, hence we put in a pentagon. Then we come to machinery and plant account. 1,44,000 has gone up to 5,94,000. And as per the depreciation calculations, machinery and plant depreciation is 32,000, absolute amount is given, and the difference between the two sides has got to be bank payment for purchases, 4,82,000. Once again, it is a missing item to be used for funds flow. Third item is furniture and fittings. Opening balance 6,000, closing balance 5,500, and depreciation is given as 5% of 10,000 is nothing but 500. Account perfectly matches. There is no missing item in that. The account is as good as ignorable. Only depreciation has to be taken into profit and loss adjustment account. We have shares in other companies, 80,000 in the beginning and 2,34,000, and there is an entry for 6,000 which is received and credited to this account. Wherever it is put, dividend is received, we have given credit for it, means it is an income to be considered, and it is a cash flow also. Difference between the two sides is net purchases through bank, 1,60,000. And from these adjustments account, we have missing land and freehold building purchases, machinery purchases. We have got here dividend received 6,000 and purchases 1,60,000. All these going into funds flow, and 6,000 also going into profit and loss adjustment account. We have got two more accounts which we will just have a look at. Goodwill, 2,40,000, 2,20,000. There is a fall. And in case of general reserve, we have 60,000 becoming 40,000. In both cases, there is a difference of 20,000 which is set off against each other. It's a direct transaction, not routed through profit and loss account. Hence, we have to note that this acts as a contra, and we might do without any effect of it in the course of funds flow. Then we have got provision for dividend. For clarity, opening 78,000, closing 72, and the problem states the proposed dividend for the year ended 30th June was paid. Proposed dividend means last year's provision is 78,000, it was paid. In addition, an interim dividend was also paid, 52,000. You have to just understand this. Proposed dividend for the year ending 30th June 2015 was provided in the opening balance, 78,000, paid. And then in addition, an interim dividend. This 72,000 is a provision carried forward to the next year. Therefore, current year's outgo on dividend will be 78 and 52. 78 and 52. And with this, what happens is that we get what is the net debit to profit and loss account because of dividend provisions. The balancing figure will be 1,24,000, and from these three accounts we will be taking 78, 52 and 124 into our further calculations. Coming to working capital changes, we first post current assets which are in seriatim, cash in hand, sundry debtors, bills receivable, stock and prepayments on both dates. Then we take liabilities, sundry creditors, bank overdraft, bills payable, 3 items. We calculate the total current assets, 383 to 356 means there is a fall in the current assets source. And in liabilities, 185 to 279 is once again increase in liabilities means funds coming into the company. Both current assets and current liabilities contribute to the current net working capital inflow. 26, 94, 198 to 76 means 1,21,500 is the source inflow, or it is the decrease in working capital. That's for statement number 1. We go to statement number 2. Take profit and loss appropriation account, opening balance 36, closing 38. We just post it. Then we have got general reserve as well as goodwill. This we are talking of write-off of preliminary expenses, goodwill and other assets which are non-cash expenses. In this case, as we have seen, they are a contra transaction. Goodwill has been written down against general reserve. They write off each other. Therefore, there is no need to bring it to profit and loss adjustment account. That is how we are going to treat it. Otherwise, it will come on either side, which makes no sense. Therefore, we will understand the implication and go ahead taking it to be a contra transaction. Increase in one asset, decrease in one asset, decrease in one liability. That sets off each other. Doesn't affect profit and loss adjustment account as such. Then we have got preliminary expenses written down from 6,000 to 4,000, 2,000 rupees. We take it into account. Then we go to adjustment accounts to take the balance items. Depreciation is one of the non-cash items. We take 25,000. Then we take 32,000 from machinery and plant. Then we have got the third depreciation, 500, and 1,50,000 is the profit on sale of land, which we will be taking it because it pertains to finance investing activity, fixed assets. Therefore, it will be taken here. And we have to take other two accounts to find out what is the dividend that we have paid. Dividend which is provided in the profit and loss account is the Pentagon item, 1,24,000. That, and we have seen this 20,000 written off between goodwill account and general reserve is of no consequence. We go ahead and we have covered all items in the profit and loss account, 2,21,500 debit side total, and the balance will be funds from operations, which is 35,500. That is statement number 2, simple and straightforward, based on the profit and loss adjustment account and individual adjustment accounts prepared. We now come to funds flow statement. Make use of the first statement, working capital. Make the posting from working capital statement. That is the first input into funds flow statement. Then we will go to second statement of profit and loss adjustment. Let us find out what is the funds from operations. Post that figure. Then we can move into the problem proper to take out every individual asset for possible increase or decrease in the asset to form source or application. Paid up capital 10 lakh to 14 lakh rupees, means 4 lakhs is raised during the year. Then we have got debentures 2016 series redeemed fully. There is no question of premium or anything which is mentioned. It is paid out. Therefore, 4 lakhs is the application. Third, we have a loan on mortgage raised during the year, which was 0 in the beginning of the year, 5,60,000 loans on mortgage. Then we go to adjustment accounts to find out what are the other pending things. 2,01,000 is freehold land and buildings we purchased as a Pentagon item. Then we have got machinery and plant Pentagon item, 4,82,000 purchased. And we purchased shares in other companies worth 1,60,000, and we sold machinery worth 2,50,000. That is the cash proceeds. In addition to this, along with the investment, we received 6,000 rupees, which was credited into investment account. Then we go to the last account of provision for dividend. We find we paid 78,000 of last year, and we paid interim dividend of 52,000 for the current year. With that, we have covered both sources and applications, 13,73,000. That comes to the total. Once it is matched, it takes care of the first two statements and also this statement. If you see in totality for an overview, problem, working capital, posted into funds flow statement, profit and loss account, posted into funds flow statement, then the total on both sides matched, considering the double entry effect of every transaction attended to, that is a thumbs up. Thank you so much. Thanks a lot.